Hello, and thanks for joining us today. My name is Anita McCuitt, and I'm the president-elect of the Canadian Club of Toronto. It's great to have you join us on what is our third virtual event, and judging by the number of you registered today, there's clearly a lot of interest in today's topic. As you saw from the intro video, our club prides itself on having engaging discussions on the topic of the day, season after season. And while we can't meet in person for the moment, I'm so pleased that these important conversations have not been a casualty of this pandemic. But these are challenging times. And while we all know about the health crisis that's unfolding, many of us are equally concerned about the economic crisis that's seeming to go along with it. Specifically, what that might mean for our retirements and for our public pensions. So today we have a fantastic panel of guests representing some of Canada's largest pensions, and they're going to speak to the realities of long-term investing post-COVID. Before we dive into today's topic, here are some key information points about how to participate with us. So all buttons are located directly below the video screen. The low feed button might help you if you find that your internet is slow. The video quality might go down a bit, but the audio quality will stay strong. When you click questions, a new window will open and you can enter your question in the window and we will get it and pass it on to our moderator. The request help button is for technical support. And we are pleased to host today's event thanks to the generous support of PwC, our sponsor. So one of the club's traditions that has not changed is the toast that we make to our nation at every event. And usually we do this in person by the raising of a glass, but we're going to attempt to do a virtual toast. So if you have a glass nearby, I do, make a nod to the screen and toast to Canada. To Canada. Have a sip.
To Canada.
Okay, it's time to introduce our panelists. First, we have Blake Hutcheson, president of OMERS. Jane Rowe, executive managing director of equities for the Ontario Teachers Pension Plan. Kevin Uebelein, the CEO of Alberta Investment Management Corporation. And today's moderator is Mark Wiseman, global investment manager and business executive. Mark, over to you.
Thank you so much, and thank you to the Canadian Club for hosting us. And we have a lot of ground to cover today. I'm looking forward to getting everybody's questions as well. But why don't we dive right into it? There's a lot for us to cover. And you know, I want to ask the first question I want to ask of our panelists is really probably the one that's on most people's minds. In the turmoil that we're seeing today, the economic turmoil. Are the pensions of our teachers, our municipal workers, Albertans, safe in the current environment? And what assurances can you give, or are you able to give to your members that their pensions are indeed safe given the current environment? I'm going to turn to Blake first. And Blake, you might want to explain what you have on your head. It is not, I'm told, a Make America Great Again hat. But for those who have poor video quality, you might want to explain exactly what is perched on your head before you answer the question.
All right, Mark. No, it's quite the opposite, actually. Can you hear me? Yeah? Yeah, okay, good. It's quite the opposite. It's in honor of Canada today. I brought out my best Canada hat. I think it was appropriate. The Canada Club does great things. And I actually just wanted to start by saying, you know, I think FDR said it best, that when the big economic meltdown was happening, that his generation had a rendezvous with destiny. And I think we feel the same way at this point. And I just want to say how proud I am to be Canadian. The financial institutions in this country have been the model of the world. The pension plans have been the model of the world. I'm going to make a prediction in front of the Canada Club today that we're going to come out stronger, better, and the model for the world. I'm so impressed with what the feds have done, so impressed with what the provinces have done, and particularly Bank of Canada, in terms of getting it moving quickly, being in lockstep with other Western democratic countries. And so here I'm a proud Canadian, out of solidarity with all you guys. I could not show up without this hat on. So Now, in terms of what's going on, I mean, it's bizarre. We had our annual meeting last week, and what I got to tell our 500,000 members is we had an 11.9% year last year. We generated $11.5 billion worth of cash. We invested $10 billion in the province of Ontario. All the things we hoped to do, wanted to do, we're 97% funded, are terrific. We're 107 days later, and to your point, people are wondering whether their future is safe. And so the two questions we keep getting asked are, we're not judging you guys, Blake, for what happened, but we are watching how are you reacting to it, and are we safe? Will we get paid? And to the first point, I am so totally impressed, totally proud of the way the team have reacted. We've shored up 3,500 people around the world so that they're working remotely. We haven't missed a beat. We haven't missed a pension. We figured out how to get the maximum flexibility out of our portfolio. And so I think if they ask the first question, the truth is we reacted, I think, beautifully. I think it's true of Canadian pension plans in general. I think it's true of Canadians in general. And the second question is, will we get paid? There's just no question about it. People get paid on time. People will get paid as always. And they should rest assured that the stability of the pension plan and the stability of the Canadian story, including the comfort we have from governments around the world, and this one specifically, will ensure that we see another day. So I'm proud to be Canadian and proud of our story, Mark. And I think that the pensioners, ours and those around this country, can feel comfortable.
Jane, if I was a 40-year-old teacher in the province of Ontario today, I'm looking forward to working for a decade or two more in my career, perhaps beyond that. How should I feel about the long-term prospects for my pension, given the volatility and what we're seeing happening?
Sure. So maybe I'll just build upon Blake's comments first of all for a context. And whilst I too am very proud about how the country has been responding and feel confident in the stability of our financial system and our pensions, let me just say on behalf of the teachers of Ontario, a huge thank you to the frontline workers. They've been doing a phenomenal job across the country, and without their efforts, we could not be handling COVID to the standard that we have. So let me just build on Blake's comments with that huge thank you to frontline workers. I think when we think about Ontario teachers, we have a very large pension payroll. It's about $6.4 billion a year. We finished 2019 with a surplus. Obviously, the world's changed a lot over the first 90 days of 2020. But we had, as a pretty conservative pension plan with a very mature membership group, we'd been preparing for sort of the end of what's been a 10 to an 11-year bull run. So we had already been positioning our portfolio to be somewhat conservative, perhaps less reliant on equities, more focused on a balanced portfolio for good times and bad times. I think that positioning has helped us as we think about prepping for COVID. We didn't know what the Black Swan event was, but as we think about managing our portfolios in different scenarios and contingency planning, I think fortunately everything that we have seen has fit within our contingency and stress tests. And I think our pensioners should feel comfortable that their pensions will be safe.
Thank you. Kevin, I want to ask you the same question, but of course, in Alberta, it's not just an issue around, it's obviously not just an issue around the COVID crisis. We also have a further economic crisis caused by the oil price. Last time I looked, I could buy a latte at Starbucks, and it was more expensive than a barrel of Western Canadian Select. So obviously, the challenges in Alberta are multiple, not just a pandemic, but obviously changing circumstances economically as it relates to the energy industry. How should Albertans feel about the situation and the solvency of their pensions?
Right. Well, Mark, thanks for that question. And you're right. It feels like a bad stand-up comedy joke. Take my oil, please. We're really approaching net negative prices for oil. But with regards to our pensions, and I'll remind folks that here at AIMCo, we manage a portfolio of different Albertan public pension plans. So it's It's public service, local authorities, special forces, across the whole gamut. All of those pensions are safe. And I just want to echo what Blake has said. When you enter a crisis, your starting point is really important. And luckily for the pension funds here in Alberta, and I think across Canada, we started from a very strong place. Our pension funds were, in most cases, the strongest funded position they've ever been, certainly the strongest in many decades. The pension funds here have very strong net robust cash flow because they're mostly young pension plans. And the other point that I would just make is that for all of the plans across Canada, I think we've done a good job of remembering and learning and being prepared from the experiences of 2008 and 2009. And that's put us in really good stead in terms of how to react to a crisis like this. Even though it's certainly a different kind of crisis, it's put us in a really good position.
Thank you. I want to just change tacks for a second. We're going to come back in a couple of minutes to the portfolios and get into a little bit of detail about your portfolios. But I'm going to come to Jane. All three of you are business leaders. In addition to running pension plans, you're running a business. And obviously, circumstances for all of us have changed dramatically in terms of the way that we work and how we manage our teams, et cetera. Jane, maybe start with you. How are you finding, as a business leader, as a leader broadly, how are you managing in this environment? How are things going?
Sure. I mean, I think over 99% of all teachers' employees are now working from home. Certainly 100% of the equities team that I work with are working from home. These are unique circumstances, so we've amped up team meetings, whether small teams or large teams. We've brought Cleveland Clinic in to be a resource for our employees. I think that's gone over super well. We're trying our best to answer all the questions that our employees have. And we've sort of clearly articulated that we have really three major priorities as we think about the portfolio and business today. Priority one is actually the health and safety of our employees and the employees of the companies that we own. And for us, that reaches out to over 300,000 employees, just thinking about the equities department alone, in particular the private equities department. And so it's really the health and safety of employees is priority one. Priority two as a leader, it is really to make sure that we're doing as good a job as we can in protecting the capital that the plan has already deployed. For us at year end in equities, that was about $45 billion already deployed, and making sure that it was going to be safe and that the companies that we back, which today add up to over 74 companies around the globe, that they have the liquidity and the contingency plans and crisis management plans in place to make it through this crisis. And if we have a comfort on health and safety and we have a comfort on liquidity and contingency planning, then we're thinking about what might some of the future opportunities be for the plan going forward. But, we've really tried to have our teams and our portfolio companies sort of work to those three priorities.
Now, Blake, you've got obviously responsibility for OMERS employees, but also as part of that Oxford employees. So you've got a large employee base. And how are you managing as a business leader in this environment? Obviously, you're having to do it from a distance. People are in different circumstances. What challenges have you faced, and what opportunities might you see from this situation?
Fair enough. I think Jane said it really well. I think early on, it was people, portfolio, and then positioning in the future. So I think the same sort of three waves matter. I have a unique challenge because I'm new in the role. Right? In fact, technically, I'm not CEO till June 1st. And I realized early in life that leadership is not entitled. And so in addition to trying to make our people come first, I have to make sure that I build the confidence in them and the trust in them. And so I've probably never gone harder in my life, and I'm not complaining. It's a privilege. And I've really tried to make communication to our people, reaching out to our people, the welfare of our people, first and foremost on our agenda. We've put in business continuity plans. Like Jane, we brought in our chief medical officer, who's been a rock star talking to our community. We've made sure I'm now a full-time vlogger. Once a week, I talk to groups in 3 dimensions rather than 2. And I really tried to make that a 24/7 priority because we've got a global company operating in 28 cities around the world. That's priority 1. Priority 2 is the positioning of the portfolio. And, we've got a terrific CIO, we've got terrific leadership, but we've got 22 PE companies, 30 infrastructure assets, 450 real estate assets, $30 billion in equities, $22 billion in credit. So the whole team have put an all hands on deck approach to making sure that we have all the flexibility for the future. And they've done a great job in recent weeks just making sure that's true. We're raising some money today, medium-term notes, et cetera. So everybody's worked at that. That's priority 2. And now we're starting to embark upon not just our investment book, because that today, I think like everybody, your main priority has to be the businesses you've invested in, making sure they're shored up, making sure they have. The second priority is how do you get positioned with capital to unlock multi-generational opportunities. We think there will be some. So our teams are underwriting those things today to make sure that we can really, most of the great fortunes have been made after really difficult times. So that's not lost. And then the big positioning question for us is what does it look like coming back to work? So, the big issues are bigger governments, more regulation, solvent companies should remain solvent after, but their balance sheets will be stressed. Risky geopolitics, increase in social unrest. Some of our globalization, we're retrenching from that. So we've got a team working on what the world looks like, big picture, and death and taxes. Never been more true than today. I think Mackenzie King put it best when he said, your taxes today are the promises of yesterday's politicians, and there's going to be more of that. And then there's the little picture. What does it feel like coming back to work? People want more elbow room. What do we do about feeding people? What do we do about transportation? What do we do to make sure that the social fabric is there because people love platforms? And you mesh the big picture with the little picture, and we're just trying to get that right to be a best of class employer and to make our people feel comfortable. So those are the priorities, the 3 Ps, and because I'm surrounded by great people, I think we're faring pretty well.
Kevin, just before I come to you, to maybe just get, what maybe I'll ask you in just a second, what message right now, because I think many of your employees are probably watching this, what message do you want to give to your employees so we can all hear it, frankly, because it's probably good advice for all of us. I am getting questions, by the way. If you do see me looking down, I am getting questions in from the audience coming through to me here. So we will be getting to those shortly, and please keep them coming. But Kevin, if you had a message directly to your employees right now, what are you telling them? Oh, you're muted, Kevin, I think.
Rookie move. Sorry, folks. The message that we're sending to our
You're supposed to say, Kevin, you're supposed to say, read my lips.
Exactly. Actually, what I said, Mark, is that I'm detecting a trend, which is that I get to answer every question last, which means I have to be much more creative than the first two. But here goes. The message
he is the Albertan.
The message we're sending to our employees is really one of empathy and support for each other. If you think about this, the first order for us was to make sure that our employees were safe, but they're also fully functional. But then if you look at the second order, you realize pretty quickly that this new reality that we're living in is not delivering stress levels equally across our organization. We've got certain job functions that have become much more important and frankly, much more difficult in this reality than others. And then we've got certain employees whose other life facts make their life much more stressful. So, you take the example of a single parent with school-aged children with school out, and you add on top of that one of these really stressful jobs. I don't know, something like collateral management. Collateral management in the near term is a hand-to-hand combat effort. And so we're both as senior management trying to make this a bit more personal, looking at which individuals are experiencing the most stress through all of these variables. And we're really encouraging all of our employees to think empathetically and to support each other.
Well, look, again, we're business leaders. We're also human beings, and I know you're also managing your own lives very differently than you might be used to. I want to move now to talk a little bit. I'm going to go. I'll come to Jane, then I'll come to you, Kevin, and then Blake this time. And then I'm going to have a hard question after Kevin. You're going to go first on the hard question. I want to just move to the portfolios a little bit. All three of your plans have significant exposure to private asset classes like real estate, private equity, infrastructure. How are these asset classes reacting in the current environment, and how are you managing liquidity around those asset classes and across the whole fund in general? So maybe we'll start with Jane on this one, given that you run private assets at Ontario Teachers.
Sure. Sure. Thanks, Mark. So the first thing that I would say is we've really upped our engagement model with our portfolio companies and with our total fund management team internally at Teachers. So we have been working with companies. I think, Blake touched on this, or Kevin did. It touches each portfolio company differently. So if I think about our gyms business, you know what? Nobody's going to the gym right now. They've been shut down by government mandate of citizens stay at home. It's been impacted quite severely. If we think about our garbage pickup business called GFL, has not been impacted in the same kind of way. So we're working with the boards and the management teams at all our companies. Would say we've probably amped it up to have board meetings weekly at almost every company that we own, so that we're having a good appreciation for how the COVID-19 is hitting their companies. We have been running stress tests with those management teams to make sure that we have an anticipation of how this might hit their company over the next 3 months, 6 months, and 9 months. And as we work our way through that, we're working with our treasury team to make sure that we've got access to the funding. And as I mentioned earlier in the phone call, our portfolio is responding as our stress tests had anticipated from the learnings on the GFC. And so we're able, I think, because of our engagement model and close communication and stress testing and being positioned conservatively as a plan, we feel pretty confident in being able to meet the liquidity needs of the plan and of the companies that we own. Some may not survive, this event. But we're here to support them and to try and be a value-add partner. We've recruited BCG, just to kind of help you, recruited BCG to help our portfolio companies understand the plethora of government programs that have been announced around the globe. And we've recruited KPMG to help our portfolio companies work under those programs as best we can if it's applicable. So, I think we're trying to be a value-added partner to the companies we own and helping them through this crisis as best we
can. Kevin, how are your private assets holding up, and how do you think about them from a portfolio construction point of view in this environment?
Am I off the mute this time, Mark? All right, perfect. Well, listen, the way our private assets or illiquid assets, as we call it, are behaving, run the gamut from holding up very well to, really getting hurt quite badly. If you own a cinema company anywhere in the world, you're sitting on a lot of empty boxes that aren't showing any movies. That's sort of at one extreme. And I think, as Jane said, there's a lot of other infrastructure or other, essential services businesses that are doing quite well. The point that I'm struck by is that one of the greatest advantages of holding these types of assets is the transparency that it lends in, the ability to directly influence the outcome. Listed companies are overall being less transparent right now. That's generally speaking, as they start to hunker down. Maybe that's not unreasonable, but it's a reality. So it makes understanding what's happening within those companies actually more difficult. When you wish you could see better, you can actually see a little less. And that's exactly the opposite of what's happening when you directly own these other operating companies or illiquid assets. You have the ability to be in the trenches with them, hyper transparency, and you're able to help understand what the ugly truth might be, but steer them out of it. And I think that's critically important. I'll also just add very quickly before passing the talking stick on that having strong partners, present company very much included, having strong partners with totally aligned interests is critical when times get tough like this.
Blake, maybe you could comment. Thanks, Kevin. Blake, maybe you can comment specifically on real estate. Obviously, you've got responsibility for the whole portfolio at OMERS today, but you've got a deep background in real estate. Can you give our audience a bit of a sense in terms of what you're seeing specifically as it relates to real estate assets? I don't need you to necessarily comment directly on Oxford, but maybe what you're seeing in the industry overall.
Sure. I mean, we're about 15-16% real estate. We're about the same PE. We're about 20 in infra. I'll just shout out for infra for a second. It tends to be the most resilient in these times because the counterparties are governments, they're concession type contracts. So when you look at that book, it's been more stable. I think to the other's point on PE, it varies, and it just by definition, it will vary. Some will be winners, some will be losers. Real estate, I would say in general the following. It's if you polled the big companies, I think you're getting 90% of your revenue today for office, 90% for industrial, 90% for multifamily, more or less of the revenue streams. Hotels obviously hit hard. Retail is getting hit hard. And frankly, oil and gas-based communities get hit hard. So when we look at those three areas, they're probably the most difficult today. And retail by far the most. I think that any trend towards all the things we're used to from shopping online is getting accelerated at a breakneck pace, and people are getting pretty good at it this time. And when you splice and dice our retailers, you're probably getting closer to 35% revenue in a single month, and that's only month one. There are, 20% of your companies can pay, and there have been a few that surprise you. It's kind of un-Canadian when you can pay and you don't, because we're trying to keep back all the arsenal we have to prop up those who can't. And so we're surprised by a few, not many. Most who can pay are paying. And then, and our partners, both those on the line today have been terrific partners with us from time to time. We're all trying to struggle with the same thing, which is how do you bridge this period of economic suspension, be as decent as you can, find ways to, and it's different for each retailer, find ways to get them through the cycle. Sadly, some won't make it. I don't know what that percentage is, but it's just a fact. And sadly, as Jane said, some of the PE companies won't make it. And sadly, there will be some permanent job loss. And we're seeing it across the PE network, and we're seeing it across particularly the retail network. It breaks your heart, and you try to do your best in the short term, but there will probably be some long-term implications, and that's among them. So, and then when you model a real estate portfolio, some of it will take months to come back, and frankly, some of it will take years to come back. But luckily, we have great assets. We're in the right markets. It's a bulletproof portfolio, great diversification. So I'm not worried about it, but clearly there are winners and losers in real estate like all other asset classes.
Jane, I want to come back to you just for a minute, sort of on the same theme, but talk specifically about private equity. You have a very unique insight. Kevin was talking about transparency of the private portfolios, maybe compared even to public companies. And you have unique insight given the companies, as you talked about, that you own around the world directly. Are you seeing any trends between geographies? I mean, what insight do you have from your private companies into the overall economy and where we're seeing impact, whether it's geographic, by sector? Where are you most worried, and where do you see hope?
That's a really loaded question. I like to, unfortunately, I worry about just about everything that comes across my desk. And for sure, all of our portfolio companies are in areas that are being impacted. You're impacted if you're in Asia today or in Europe today or in North America. I would say we're seeing pockets of recovery and perhaps our Asia portfolio is one that will experience more of what they call a V-shaped recovery than a U-shaped or an L-shaped recovery. If I think about, activities in Hong Kong, Korea, China, Singapore, these are countries where it appears to hopefully have the worst behind it. And I think management teams are pivoting more quickly to coming back out of the shutdowns that have been taking place in those countries. I think in Europe and in North America, it's still too soon to tell. One of the things that we do try and focus on at Teachers is to make sure that we're buying companies that work well in the long term and work well through different cycles. We have a portion of our portfolio that is not typical LBO. It is what we call long-term equities, and it's kind of the sweet spot between what Blake was calling infrastructure and what you and I might think of as leveraged buyout companies. And we are seeing those companies in our portfolio actually, when they're plotted against resiliency and essentialness of their services, they're actually performing well and performing better than most of our LBO assets. And so, and we are fortunate to have that kind of a portfolio construction for the long haul.
Thank you. Kevin, I'm going to switch gears just a little bit. And Steve from our audience had, there's been a few questions like this. Steve had one of them. I actually had one prepared that's in the same vein. And that really is about the structure. I want to ask you a question about the structure of our pension system. So, in light of where we are today in this COVID-19 crisis and the economic toll that's taking, we've seen, for example, in Quebec, the Caisse de dépôt recently announced a $4 billion program, as I understand it, which is meant to help support small businesses in that province. The question I have for you is, should pension plans have a role in stimulating the provincial economy, for example? Are you contemplating these types of programs? How do you see your role as we try and think about not just supporting the economy today, but supporting a recovery?
Right. Well, thanks for that tough question. First of all, I think all of us have a tremendous amount of respect for the things that the case does and the way they try to balance what people describe as a dual mandate there in Quebec. I think for the rest of us, though, we tend to think about this as the best job that we could be doing is making sure that the pensions that we're managing for are as well managed and as well preserved as possible. If that means that there are good, sound investments in our own backyard, which there frequently is, then God bless us all. It's a win-win. But that really our best way of keeping Alberta strong is to keep the public sector pensions strong. So, we manage pensions for a tremendous number of first responders, medical and healthcare workers. I don't want them to have to come home after double shift and worry that we're putting their future pension at risk. So I think that we're doing the best job we can by sticking to our knitting. I think it was someone who I respect very much who said, the next time someone asks these pension plans to take a portion of their assets and throw it at a solution, you might just ask every other individual to take their defined contribution plan and take 15% of it and help with the bailout and see what kind of response you get. Mm-hmm. So that's sort of our position right now.
Blake, how about Ontario? How is this issue been raised to you, and how's OMERS thinking about this same point? The role of the pension plan in stimulating the economy or protecting businesses in the province?
Yeah, the answer is it's never been raised, Mark. I think the First of all, if and you're good at this because you ran the biggest one in the country, to try to get us to say something negative against one of our other compadres, it's just never going to happen because we don't look at each other's competition. We're all actually good partners and peers. So the case has a unique situation where, frankly, it does have the opportunity or the responsibility to invest some of the Treasury money or some of the Minister of Finance money. And so it's hard ever to parse what's pure pension plan and what is something that is a sort of a tool of the state. We've never been asked in my 10 years at OMERS or Oxford to specifically invest for those purposes. I think Rod Phillips, I think is doing a great job, by the way, today for Ontario, has his tax dollars. He's investing them the way he sees it. I don't think he expects us to take, and our pensioners who pay tax, that goes towards the things that the province sees as important. They don't expect us to be a tool of the state and to invest their money the same way tax dollars would be spent. Having said that, I think like Kevin, we look for opportunities all the time in Ontario. We happen to love the counterparty. We happen to like the currency. We happen to understand the rule of law. We happen to be able to solve an issue by walking down the street. So we are really, really, really ambitious to invest more in Ontario. Collectively, I think we contributed $10 billion to the GDP last year in Ontario. And we hope for more opportunities and hope to be able to co-solve issues with the province. But the best interest of our pensioners in mind, and their return is first and foremost, and that just won't change. I'll say too, I'm so proud, and the others could share stories. I mean, we own 50% of Bruce Power. We manufacture through the nuclear process an isotope that's ideal for sterilizing medical equipment. So Bruce Power donated a piece of this isotope to a manufacturer in Ottawa that's now distributing that across Canada in a timely way to help hospitals around the country as a pro bono offering. We bought 600,000 medical protection devices and donated them to the province. We've given malls to nearby hospitals, including in Edmonton, Kevin, to help with their staging and emergency service workers. In London, England, we gave over London City Airport, which we own, to the city for their emergency service workers. So we can help in so many ways. And we, like the others on this call, anything that's underutilized in our book, we're trying to help the community. That's not lost on anybody. Investing directly, as you suggested, just isn't one of those ways.
Thanks. Jane, we got a question from Peter, a question actually that's from the audience that's near and dear to my heart. And I'm wondering if you could maybe start addressing this one, which is, we had a huge focus among the institutional investment community on climate change and sustainability. Do you see a risk, and what do you see as the risk of this crisis derailing that or distracting us from that? Or how do you think the current situation may have an impact on our focus on sustainability as investors?
Yeah, so I don't think it will distract us, Mark. I think, if you're a long-term investor, you are already thinking about these issues quite deeply. And ESG and climate change plays out in many manners. It's not going to go away. It is something that we as investors have to deal with, whether it is environmental issues or governance issues or societal issues. And just to maybe build a little bit on Blake and Kevin's answers, the stronger the pension plans do, the better investment performance we have in the long run. And sustainability has to link into that, because otherwise you're just going for short-term profits. So if you can genuinely think sustainably on this, you will actually, we believe, perform better and contribute more, have better returns in the long term. And that actually reduces the burdens on taxpayers across this country. So, the better we do, and sustainability links into that. As we think more specifically on our portfolio, we are starting to work with our companies in having them think about what does transitions to a low carbon economy look like. It is something that, we will not be transitioning quickly, but we have to prepare for it, and we have to engage in that as owners and, help our companies be ready for it.
Kevin, maybe asking the same question to you. I mean, obviously there's been a huge focus in Alberta on green energy and developing a sustainable energy economy for the province. Do you see this both in your investment portfolio and potentially for the province being derailed?
No, I really don't. And I think it's important that we don't confuse short periods where these issues and these themes are crowded out of the headlines and out of the media, as opposed to in any way being crowded out of long-term priorities or long-term action. And so I don't see any of the latter. I see a lot of the former, because we've got, an earth that's on fire around COVID-19. So I think that from my vantage point, if anything, I think there's a real opportunity for this to be an accelerant in certain regards. So what do I mean by that? I think that the way countries and businesses think about global supply chain on a pro forma basis after this crisis is going to fundamentally change. And I think that the changes that they make could be made hand in hand with thinking about their carbon footprint or responsible investing. That's just one example.
I have another question from the audience here. This one's from, and I apologize if I get the pronunciation wrong, Tenio, who's asking about, and maybe Blake, we'll go to you first, who's asking about what advice as investors that you may have, and taking that long-term view, that you may have for governments in terms of thinking about restarting the economy. How do you think about that as investors?
It's a good question. I mean, first of all, I don't think any of us have ever seen or even contemplated a situation where the health of the global economy is pitted directly against the health of the global community, and any incremental dollar you spend in service of one has an equal and opposite effect in service of the other, and it's like mutually assured destruction. And so our policymakers and those on the front line having to make these decisions, it is brutal because they know it's a zero-sum game, right? And so I don't have an answer. I think the one thing that's become very clear is this is a region-by-region issue. It's not, no decree at the federal level, no decree at the provincial level would apply equally to all pockets of their societies. And so it really is an incremental rollout. It really has to be on a city by city, region by region basis in the same way it is for our respective companies. And it can't be, in an ideal world, and Bill Gates has his however many hundreds of billions of dollars. In an ideal world, we do have a complete cessation of personal interaction, and that would serve us well on the health front. We just can't do it from an economic front. So I think it's a gradual bleeding in. I think they do have to take some risks. I think it's incumbent upon our governments to make sure we have capacity in our hospitals so that if they do take risks, they aren't by definition playing God with lives. And turn the tap on. It's a dimmer switch, not a flick on dimmer switch. Dial it if you need to. I think that's the best advice, and I think that's what they feel in their hearts, and we're seeing good demonstration of it in Asia, and I think it's the only solution.
Kevin, Jane, anything you want to add on that one?
Yeah, for me, the only thing I'd probably add on that is that, I do hope that that they don't rush and that they come out with a balanced thought through response. This is, to Blake's point, a combination of economic and health factors that have to work well across both of those paradigms.
Yeah, an analogy with long-term investing comes to mind, which is, I think the best long-term investors have to use a deep reserve of judgment and use both patience and nimbleness at the same time. You have to be patient, but you have to know when to be nimble and when it's time to act rather quickly to either shut down risk or find opportunity. And I think my hat goes off to the leaders around the world who are going to have to struggle with those two countervailing themes of patience but nimbleness.
Great answer. I'm going to ask one more question from the audience, and I'm going to reserve the final question for myself. Another question from the audience, which is, when if you were to think back a year ago, and none of us anticipated this particular black swan or this particular event. What lessons are you going to take from this going forward? Assume we're back into some degree of normalcy. What does this teach you as investors, as portfolio managers, as pension fund executives about what would you do differently going forward? Or what might you have done differently, I guess, to put it another way, had you had a crystal ball and knew this was coming down the pipe, let's say a year ago? Maybe we'll start with Jane, Blake, and then Kevin, and then I'll ask my final question.
Oh, that's, 2020 hindsight's a beautiful thing to have. Wish I was born with it. Would say, kind of out the gate, we sold about $7 billion worth of assets last year. Perhaps we should have made that number 14 billion. Valuations were very compelling, and maybe we should have sold more if we had known this. And perhaps we would have accelerated some of our IT infrastructure investments in some of the companies that we own so that they could more readily work remotely and work from home as those opportunities presented. I think the team at Teachers did a great job in preparing for a downturn. We didn't know what it was going to look like and trying to get risk off our portfolio in advance of this. Obviously, we known it was coming. Maybe we should have accelerated that further, but you just don't know these things, and you have to try and build a balanced portfolio, and that's certainly what we've done.
Is that over to me, Mark?
I think it's over to you, Blake. Yeah.
Yeah. I mean, I think that, the three things I've written down are relationships matter, flexibility matters, and appreciate what you have. I think the first thing, and it's part of the reason I'm wearing a Canadian hat. I think the first thing you do when you have a crisis is you want your parents and your friends around, and whether that's a metaphorical parent like the governments or the Bank of Canada or your fellow colleagues, or whether it's your family. And so it's just a great reminder that you need to have strong relationships with your counterparties, with your partners, with your colleagues, with your governments, with all those around. And what's demonstrated to me in the last year is just how important Canada is again. And it's no offense to any of my global partners around the world. They've shown up for us. Our Canadian banks have shown up for us. Our partners in this country. And so never lose sight of that. Now, that doesn't mean we can't develop the same depth, and we're really working on it in the context of the other places we work, but relationships matter. We all know it more than ever. Good reminder. Second of all is just the flexibility you need to keep when you're responsibly managing a significant portfolio. And we've all raced to it quickly. And nobody could have modeled this. Like, who's kidding you? We can pretend we do. We've stress tested things, but nobody could have quite modeled this. So always knowing where your flexibility can come from on your balance sheet, essential, even in the great times. And the third is, I think, it's on the more human level. Let's appreciate what we have. Let's appreciate the friendships. Let's appreciate the luxury of going out to a restaurant. There's a lot of people who used to argue, complain about the food not being the right temperature. Now we're lucky to go back to the restaurant with our friends. And so if I reflect back over a year, and that's one of the big learnings for me, is just how blessed we are, those of us with our health and the opportunities we have. And let's not forget that no matter what happens through the cycles.
Kevin.
Oh, well, listen, I think that Jane and Blake were very eloquent. Everything they said resonated with me. I think this notion of the strength of relationships and partnerships is so important, not just across organizations, but having an executive team that trusts each other, that rely on each other in the right ways, and that get to better results, faster results, because they work together as opposed to at cross purposes. That is just critically important. This notion of risk management and just acknowledging that when somebody says something is a once in 100-year event, they probably be a once in 10 or 12-year event, because I've been working for quite a while, but still, I think I've experienced now 3 1 in 100-year events. We just need to be mindful that these 1 in 100-year events happen more often. They never happen the way you've modeled them. And so when your risk professionals throw you some, what you think is a completely wild-ass, I can say that, right? Really wild-ass scenario. And there's people in your organization that say, let's not be ridiculous. Stop, count to 10 and say, maybe it isn't that ridiculous.
Yeah, Mark, our risk departments need a shout out because, at times they've been thought to be an irritant and their currency has just gone through the roof, and we're appreciating them more than ever. So you're welcome, guys, but it's true.
You're here. Second toast.
They're all going to be asking you for a raise, guys.
Yeah.
Let me ask one last question. I want to turn this to sort of be a little bit positive at the end here. Our pension plans in this country, your 3 included, are incredibly well capitalized. They're the envy of the world in terms of how they're managed, in terms of professional management, the way they operate at arm's length from government, and this may very well provide for investors like Canadian pension plans, professional investors who have liquidity, who are well capitalized, who are well managed, one of the greatest investment opportunities perhaps of a generation. So if you look forward and you want to start thinking about the positives that come out of the current situation as pension managers and investors, I'd maybe ask each of you to talk about what you think may be the big opportunities for investing to enhance pensions for your members. So, you talked at the very beginning about the fact that people don't have to worry about the solvency of their pensions. Let's turn it the other way. What's the opportunity coming out of this? And we'll go with Jane, Blake, and then Kevin.
Thanks, Mark. And at Ontario Teachers, we do try and think about the world in quite a global lens. We have offices in Hong Kong, London, and Toronto, a satellite in New York. We're opening up in Singapore. I expect us to continue to think about a global footprint and expanding that footprint as we go forward. I think this pandemic will have recoveries at different paces in different places. And if we're globally positioned, we can take advantage of that and participate in growth and growth trends over the next couple of decades by thinking with a global lens and yet balancing local opportunities with that. I think, you have 9 or 10 awesome pension plans in Canada. I think we are great partners, as Blake has commented on, but we're also quite hardy competitors when it comes to Canadian opportunities to deploy capital. And sadly, there's just not enough to take care of the appetites of everybody. So for us at Teachers, we are thinking globally about opportunities and capturing pockets of recovery as they occur, but that are on a sustainable way that will last for decades to come.
Blake, what are the big opportunities as we think about going from defense to offense?
Well, and I think it's right to end it on a positive note. Anybody who's lived through cycles knows that we will come out of this one. Anybody who's a student of history knows that there are great opportunities when you emerge from these times, even though it doesn't feel like it at the time. My father was a serial entrepreneur, and he's always said, if you don't believe in tomorrow, you shouldn't be in business. He's 93 and perfect health and reminds us of that every day. So we're optimistic and we are prepared, and we've got the flexibility to go on a run. And part of it's global, I think, as Jane articulated. None of us are going to reveal exactly what we're going to do, Mark, for reasons that articulated. And I think the first wave of opportunities are going to be credits, because there's a lot, the banks are getting taxed beyond belief. They can't finance everything. I think there's going to be real opportunities in the credit space to provide good capital, and it's a box trade. You get high yield, and if someone defaults, your last dollar of risk is reasonable. You own some great assets. That's the first wave. The second wave is there are going to be really amazing platforms that will be able to be, that are going to need the balance sheet strength and the support. Right? And I don't think, all of us have different businesses. A business plan is, what are you great at? How do you get in the way of a trend given limited resources? And so I think it's important. We're all going to have our own, but we're underwriting some at this very moment, and I think they can be multi-generational, and we're pretty excited about them. So lots of reason for optimism.
Kevin, what do you see as the opportunities for AIMCo?
Yeah, I also think that there's a couple phases here, and the stock answer to volatility for long-term investors usually is, well, we can let volatility wash over us. But when you've got volatility like this, which inherently means that it's not a true representation of the intrinsic value of the assets, then that volatility has two faces. It's either going to be a threat or it's going to be an opportunity. And whether it's one or the other for you has all to do with your liquidity situation. If you are in a liquidity pickle, then this volatility is a threat, because it means you might have to sell something at the wrong price. But if you have a strong liquidity situation, then this is really the moment to start printing some profits. And I share Blake's view that I think there's going to be some real near-term opportunities in the credit space, and we're already pursuing some of those. That's not to say that equities aren't completely crazily priced as well. I think longer term, the thing that intrigues me is the implications that this downturn is going to have on longer term trends and what that means in terms of investment opportunities. I already said that, I have a view that this is going to have an impact on globalization as we know it, for not just the near term, but for the long term. Supply chain security, all of those things, how we do business. I don't know how many of our employees are going to, at the end of this crisis, say, you know what? I'm working from home and it's working pretty well, and I don't need to come back. And what the long-term implications on office space is, when not just the AIMCos of the world, but many, many other corporations make those same changes. But those are the longer-term opportunities that I'm really excited about.
Well, thank you. I'd like to thank all three of you for joining us today. I take great confidence in the fact that we have leaders like you running our important pension institutions. I think all Canadians should feel comfortable and blessed that we have strong pension plans and strong leadership and strong investors in those pension plans. I have to say, I'm as I look at all of you and listen to you about how difficult it is to manage your portfolios, I'm glad you have that job and not me anymore. But thank you on behalf of all of your members and on behalf of Canadians and on behalf of the Canadian Club for joining us today. So thank you to all of to everyone. Thank you for joining. Please stay healthy, and I'm going to pass it back to our host for the final word.
Thanks a lot, Mark.
Thank you. Stay safe.
Thanks, Mark. And thanks to each of our panelists for sharing your thoughts with us today. We appreciate your expertise, your optimism, and your willingness to participate in this format. Another big thank you to today's event sponsor, PwC. And we do hope that you can join us next week for our upcoming events. On Tuesday, April 21st, we'll be hosting Canada's Minister of Small Business, the Honourable Mary Ng. And on Wednesday, April 22nd, in honor of Earth Day, we'll be discussing how we can continue to address climate change in the time of COVID. Thanks for joining us, everyone, and stay safe.
Thank you.
Thank you.
Bye.
Thank you.
Ciao.